What's up, guys? Welcome back to another YouTube video. Welcome to the channel. If you're brand new and have not seen this channel before, please give us a subscribe down below. And if you consistently watch these videos but haven't subscribed yet, please subscribe down below to keep up with the videos. As you guys can probably see on the official tag of this channel, it's financial literacy at its core. So that means teaching everything financial literacy: personal finance, budgeting, retirement and wealth building, crypto. We're going to get into crypto a little bit later, but crypto, how to get side income, right? Everything that has to do with finances, making money, wealth building, retirement, everything that has to do with money, we're going to be talking about it in this channel. So if that's something you're going to be interested in, give us a subscribe down below and go check out our IG. Go check out everything that we got going on with social media to stay updated. So today's video is going to be on why you're scared to invest, right? And how to fix that issue. A lot of people are scared to invest, not because it's risky, right? Because if you don't know investing yet and you don't understand the intricacies of it, you don't necessarily know why it's risky, right? You hear people that will probably say, I've lost money, right? I've lost money investing, or I've lost money doing this trade. I've lost money doing this, doing that in the stock market. But they don't necessarily know exactly how they're losing money. They don't know for sure. So you're most likely scared because you haven't been taught how to invest. You haven't been taught the proper way to invest. A lot of us aren't taught these things in school. Well, majority of us. I'm not someone that was taught these things in school. I had to actually go and do the research myself. I had to teach myself, right? You kind of got to become an independent person and go actually learn this knowledge and go research everything, right? Via people you see on social media who are teaching these things, or who are saying how they've made money on via investing, through investing. That's how you start to, get a little familiar with the terms, with the investing world. But majority of us in schools, we're not taught this because they created the system like that on purpose. So they're not teaching you investing. In schools, they like to teach you rules and regulations and step by step. But in investing, they don't necessarily know how to create a curriculum for that, because it's so, I guess risky, because you're investing into a broad market. So they don't necessarily want to create a whole semester dedicated towards investing. Although in college there might be some classes that are specialized in that area, whether it's investing into assets, whether it's investing into real estate. There might be specific related courses, but there's not a class specifically related to just investing into the market. So we're not taught these things, and this is the reason why a lot of people sit down on the sidelines, because we don't know what we're getting ourselves into. But in this video, I'm going to be breaking down why you're really scared to invest and how to move past that fear, right? Because in the beginning, you have to understand fear comes from the lack of not understanding something. Most fear comes from the lack of knowledge. Most fear comes from the lack of not knowing, right? You fear what you don't know. If you don't understand something, you see it as more risky. You see it as more like it's something that you probably shouldn't get into, because you've heard such and such lose money. You've heard your cousin Levante lose money. You've heard your cousin Jamar lose money or something, all right? Or you've heard someone on social media say, man, I'm done trading, I'm done investing, I've lost money. But majority of the times it's because you don't understand the skill. You don't understand it in its entirety. The same way you probably go to school to become a nurse, to become a doctor, or to become a lawyer, something, right? And then you end up mastering that field. Let's say you get your bachelor's degree. Let's say you get your master's degree in that specific field. Let me not say you've mastered that skill, but for the most part, if you're able to get your degree, you've mastered some sort of area and expertise in that field to be able to receive your degree, right? So think about it like this. If someone told you to put money into something you didn't understand, of course, majority of the time, 10 times out of 10, you're going to be like, bro, you're going to be like, bro, no, you're going to hesitate. So that's usually what happens about investing. So when people hear about stocks or ETFs or get into mutual funds, they get scared. They get a little rattled, because it's like, bro, I've never heard of these terms before, and you're telling me I can make money off of an ETF? What is an ETF? You're telling me I can make money off of a stock? What is a stock? They don't understand these things. But usually the reason people don't understand these things is because, yes, high school didn't teach you them, college didn't teach you them, but it's up to you to actually go out of your way and learn these skills and learn about investing, learn about what a Roth IRA is, learn about what a 401k is. It's up to you to actually go out there and learn that skill. So don't blame it on school not teaching you and allowing you to know these things. Blame it on yourself. Because if you're 4, 5, 6 years removed from high school, or you're 4, 5, 6 years removed from college, and you still haven't to some degree understood what investing is and how you can actually make more money by taking your money now and investing it into assets that are appreciating over time, so you could potentially retire early by the time you're 40, 45, 50, whenever you want to retire, then it's always going to be on you. You're going to have to take accountability. It's not going to be anybody else's fault. The school system already decided that it's not going to teach these things. It's not going to teach it to kindergarteners. It's not going to teach it to 5th grade. It's not going to teach it to middle schoolers. It's not going to teach it to high schoolers. And college, you would have to be in finance specifically for them to even go around those subjects. So if you're not actively going out and learning these skills, what makes you think someone else is going to come in and just teach it to you? You're going to see it on social media, but most often you're probably going to have to pay to learn that skill. But if you actually go doing the research by yourself, you have no excuse as to why you can't go out of your way and do some research. You have all the resources at your disposal. So don't tell yourself investing is like gambling. Investing is like placing a bet on Prize Picks. No, it's not. Once you start to understand it, you will realize that investing is none of those things, right? You're investing into the market. You're investing into actual companies who are making money. The second thing that causes people not to start investing is you're focused on losing money. People are scared of losing money because they always focus on one thing. They think that, what if my stock goes down, right? Let's say you invest $100 today, and you wake up tomorrow, it's at $70, $80. In your head, psychologically, it plays with your head because it's like, bro, I just put in $100. You put so much value on that $100 that you work for. You're just like, bro, I just put in $100 and I'm down 20, I'm down 30, I'm down 40. Like, what is this? Like, am I gambling with my life? That's usually what people start to think in their head. It's like, am I gambling? What am I doing? Like, why did I just put money into this? But one thing you're not realizing is if you don't invest, you're still losing money regardless. Because you'll say, why am I losing money? That's because of inflation. Your money loses value always. Just sitting still in a savings account or a checking account, your money is losing value because of inflation. So the real risk isn't just investing, it's doing nothing. It's just keeping your money in a savings account, keeping your money in a checking account. Is that you're putting yourself at more risk than not investing into the market. Also, you probably don't understand what inflation is. Inflation is when prices just naturally go up. The same way gas used to be $2, $2.30, $2.45. Now it's probably $3.50 wherever you're at, wherever you're located. The same way a Chipotle bowl back in 2021, I just was searching this up recently. A Chipotle bowl, I looked at my bank statement, a Chipotle bowl was $7 exact in 2021. Now we're in 2026 and they just added a few extra cents on it. It's $10.79 to be exact. So inflation just naturally happens. You will say, well, is Chipotle allowed to do that? Not only is Chipotle allowed to do that, every other company, every other business is allowed to do that. They start upcharging. While they're upcharging, your income's not getting bigger, you're not making more money, and you're not investing. So who's ultimately at risk? Just think about it. Who's ultimately at risk right now because they're not investing? They're not letting the money they have right now, grow for them over time. While inflation is going up, while everything is going up, your money is just sitting in a savings account. Who's actually losing? Think about that. These companies aren't losing because they're still making their money. When inflation goes up, I think there's a 2% inflation around every year. So things naturally just go up. So if you're not invested into the market, if you're not increasing your income, you're more at risk than everybody else. So your goal shouldn't be to avoid risk, but it's to be smart and to be more calculated, right? Put things in place, put plans in place to start investing. Become more calculated. Start actually thinking about your future and about the long term, about how life is going to look like in 2030, what prices are going to look like in 2030, what inflation is going to look like in 2030. I know it's probably tedious. It's a lot of math. That's probably what you think in your head. But no, a simple search on Google, you'll be able to figure out what's actually happening. Then you'll be able to do the math and you'll be able to make your own calculations. You'll be able to make plans off of those calculations. So just think about that. The third reason I think a lot of people are scared to invest is because you think you need to be perfect when you start investing. That's probably one of the things I thought when I was investing. Although I made a lot of mistakes, but I thought you needed to be perfect, right? Your P&L, profit and loss, you have to make so much, your profit has to be so much more than your losses. But that's not going to happen. When you're investing and you start investing, depending on what type of investing you're doing, if you're buying single stocks or you're buying ETFs, ETFs are a little bit safer because they're a group of stocks into one. But if you're doing single stocks, these single stocks are a little bit more riskier than ETFs. But I thought I needed to be perfect. I thought I needed to choose the right companies. I thought I needed to invest at the right time. I thought I needed to wait and buy at the right time. But little do you know, you don't know when to buy. You don't know when the right time is. Stop trying to bottom the market. Because if you try and bottom the market, that's how you actually lose money. Every time you think you're going to bottom the market, okay, the market's going to recover here. You're drawing all these technical analysis lines, these patterns, the stuff the traders be doing. I'm not a trader, but the stuff that the traders do, they think they're kind of finding the bottom of a stock or when to invest, right? You can still use technical analysis to be an investor, but people think that they can bottom the market and buy at the right time. Don't think like that. You have to reprogram your mind so you're more thinking, always be buying, no matter what. Always be buying your designated ETFs, your VOOs, your QQQs, your SMH, if you're into Bitcoin, crypto, your IBIT. This is not financial advice, YouTube. This is not financial advice. But always be buying those. If those are the ETFs that you want to choose and those are the ones that you've selected, always be buying. Tell yourself that. Always be buying. Nobody starts perfect. You're always going to lose money because in the beginning, you don't understand what you're doing. And it takes a while to get. You have to go through the trials and errors. Everybody goes through them. I've gone through them. Other people I know have gone through them. You're going to lose money in the beginning. But that doesn't mean to be fearful. That just means if you're willing to go that route and actually start making money through investing and growing your wealth, then you have to take those risks. There isn't any reward without taking risks in life with anything that you do. A business plan, the entrepreneur route, quitting your 9 to 5 and becoming an entrepreneur, anything that you do in life where you're trying to make more money or you're trying to start something brand new, there's risk involved in it. So if you don't take that risk and you don't make that leap of faith, then you're not going to start. Because ultimately, you learn from those bad experiences. You learn from those mistakes that you're going to make. If you're jotting down these notes, if you're jotting down, make like your L's, times that you picked a bad stock or times that, you thought you could bottom the market, times that you thought you could pick a stock at the right price. If you're jotting these stuff down and you're making mental notes of them, as time continues to go on, you're not going to make those same mistakes. You're going to always realize in your head, okay, let me always be buying, no matter if the price is high, no matter if it's low. Then when a good buying opportunity comes, like the situation we just had in March, where all the stocks were down because of everything that's going on in the market, you'll see an opportunity like that and you'll be like, this is the perfect time to buy. That's the perfect time to buy. When good stocks that were at all-time highs come down 20%, 10%, 30%, those are the times to start buying. So you'll start to realize that. You'll start to realize the pattern, right? Okay, stocks are consistently, they go up. We're in a bull market, but then a news hits and they go down 20%. Something brings them down. But that's your time to consistently be buying. Even when you're buying at all-time highs and you're dollar cost averaging into your positions, dollar cost averaging just means buying at any level, even at those high levels, but you're waiting till it comes back down to the bottom levels to even still be buying. But that doesn't mean timing the market. That just means consistently buying over time because you believe in your company, you believe in the ETFs, you believe in the economy of the USA. So those are the three things that I believe are keeping people back from investing, from starting to invest. And those things that come to our mind that stop us from investing, kind of like a blockade, we have to kind of get rid of them and allow ourselves to see more in the future. That's what I had. When it finally clicked for me, I was like, damn, like, people are really making money off of this. And this is how you build long-term wealth. Not any other way, but investing. Either investing into real estate, investing into crypto, investing into stocks, investing into ETFs, investing into your Roth IRA, your 401k. That's a real way to create wealth and build wealth for the long run. So tell yourself, like, don't be scared of the unknown. Rather, go out and get the knowledge. Go out and learn. Go out and learn all the information you need to know to become a good investor. Not to be an investor who's not capable of understanding what they're doing, but someone who does research, someone who's reading, someone who's understanding, okay, what an ETF is, what a Roth IRA is, what a mutual fund is, what should I invest in, what stock should I pick. Don't just pick a stock because you saw it on the news. No. Pick a stock based on research that you've done. Thanks for watching this video. And I hope you found inspiration from this video, and I hope you picked up something, a few lessons off this video. Thank you for watching. Peace.